All right, good morning, everybody. Welcome to Loan Officer Breakfast Club, brought to you by the Mortgage Marketing Animals. Every Monday through Friday for your free coaching pleasure, because why not? Why not, my friends? We're going to get started. Chris Johnson, get it.
Now.
Good job, my friend. Yeah, timing is impeccable. Well, you are from Canada, so you guys are well-timed people. What can I say? Apparently.
Sorry about that.
Yeah, sorry about that. Also Canadian. All right, well, glad to have Owen Lee in the house today. That's always fun. See what's going on. Get the lowdown, the skinny from DC. See what's happening over there. You know, rubbing elbows with the big cheeses over there. Yeah.
I'm the bearer of good news today. We're gonna get a good update.
Awesome. Let's keep that under wraps for a second. Wow, good news. Way to go. Yep. Speaking of good news, this will be a little different. If you enjoyed a good Bible verse this morning, right? And if you would like to unmute yourself and say it, I wouldn't stop you. We wouldn't stop you if you wanted to do that. Just putting it out there. We're not going to, just saying. If you got one you'd like to read to us, I'd love to hear it. I would love to hear it. So, anyways, moving on. What did we do yesterday? Yesterday was kind of cool. Remind me of it, Kristen. It was, wasn't it Carl and overcoming?
It was Carl. Like, how do we get out of our head and, when we get the nose, how do we approach that? And then it was flux capacitor day, but we totally forgot to do the flux capacitor. So we can do that next Wednesday.
I'm going to blame that on Gen Z because she's not here today. And just say that, she should have reminded me. And so there, it's her fault.
We counted on her. She dropped the ball,
Yeah.
And I'm not going to stick up for my girl, Jen.
Didn't come through with the 121 gigawatts or whatever that
is. Indeed. Oh, here we go. Deanna Bryant. Yeah, why don't you unmute and read it for us? What is it? Come on, give it to us. Give it to me. I need it this morning. We all need it. What do you got?
For I know the plans I have for you, declares the Lord. Plans to prosper you and not to harm you. Plans to give you hope and future.
Amen. Thank you, sister. Appreciate that, man. That's awesome.
That stays on a sticky in front of me all the time.
Wonderful. Yeah, excellent. Really care for that. Fantastic. Yeah, so Carl, yesterday was cool. I dug it, man. I was picking up what you were putting down. You know what I mean? That's how we say that kind of thing.
And what we talked about yesterday was rejection isn't the problem. It's the recovery time. Mm-hmm. That's the problem. So once I get rejected, how long is my recovery time before I go and take action and do the next best thing for my business? So yeah. It's not a rejection issue. It's how fast you get back on the horse.
Yeah, great analogies.
No is a part of sales. You gotta embrace it. I mean, if this job were easy, everybody would do it, and then we wouldn't make as much money as we do.
Yeah, all those things that they say they sell themselves, they're all a felony. Anything that's a non-felony, nothing sells itself. I'm just telling you.
Yeah, interesting. Yeah, nobody's going around saying, "Hey, you want a mortgage? First one's free."
Yeah.
No, nobody's doing that. I'm addicted. Get me another one of them mortgages, man. But it was good, and a lot of the responses too to how people deal with it and whatnot. Monica and etc. And there was a handful of others. I thought it was really good, man. It is good.
Good stuff.
Yeah, because it is a mental thing. You just got to blow past that. I think I don't know if I don't think we're gonna have Robin next week because you guys are at the event. She's gonna be there, but the week after,
all the cool kids are at the event. Yeah,
right. Of course. Yeah, indeed. And then
sorry you couldn't make it, Frank. I forgot the invitation. I'm sorry. I just totally forgot about that.
It's all right. When Frank was a kid, he sat in the front of the bus, so it's all right.
Oh, that's he's got me there.
But Frank should crash the party though.
Right. Yeah. Nah, that ain't gonna happen. But what I was gonna say is that Robin, she brought up that what was it, the agreements.
Yeah,
the four agreements.
Interestingly enough,
yeah,
25 minutes from this very moment, she'll be spilling the beans on the podcast.
On mine, I'm not. She's not scheduled with me right now.
Yeah, well, that's what I said. So anyway, so we're here at 9:00 Eastern. Which is 6:00 her time. Yeah, we're doing a podcast on it. So I can't wait to. Cool. I don't know what it is. I can't wait to hear it myself.
Well, we do. Justine spilled the beans for us in the green room yesterday, so we know exactly what it is. And I got to tell you, man, it's going to be
South Africans. You gotta watch them.
Yeah.
You give them an inch.
Yeah. Well, and we determined since she's in the Southern Hemisphere, she's really like tomorrow or something so she's already ahead of the game on all of this stuff. That's true. Yeah. We're in the past, she's in the future.
We need to go there. I'll kid aside, Frank. We need to go there.
Think so?
Oh, I absolutely think so. I hear it's absolutely stinking gorgeous. Mm-hmm.
I mean, maybe we should do occasionally an LOBC on location. I'm just saying.
I think we need to. Hey, what's a good month to be there, Justine? Like, what's a beautiful month?
I would say the best time is around March because it's still warm, but it's not super busy with tourists and things.
Yeah, I don't have time. My March is booked up. What's the next month? When's your spring or your fall or whichever? I know it's all
whatever's coming up next.
Yeah.
September, October, but it is pretty windy. But it's always beautiful here. I'm biased, but I love it.
So what you're saying is South Africa blows. Okay, all right.
All right. If you could just, Justine, if you could just change the weather because Carl's booked in March.
Yeah.
Okay. So
see what you can
September.
do.
I could do
change
September.
it around. Do some celestial magic or whatever it is you got to do.
Yeah. September. September's definitely doable.
And December, summer. Anytime in summer, it's just it can get super busy. It's quite a tourist attraction. Yeah.
I hear that people are very charming, and I hear it's just absolutely gorgeous. And I want to go to that city where all the penguins are. They're Cape Town. They're just walking around, Frank. They're just like walking around, like pigeons in New York City. Like they're just walking around. They're just everywhere. Yeah.
Well,
gotta bring your tuxedo though.
I'll have to borrow yours.
All right, here we go. Boy, a bunch of jokers in this morning. All right, well, cool. Yeah, but if we went on location, we'd have to get the film crew there, the production team, all that. It's a lot, Carl.
September, I'm in. I'm gonna make that happen. Look, I'll
all right.
Carl can afford it.
Yeah, I can afford it. I'll just charge it to Kristen's expense account.
There you go. And, that's what we'll do. We'll head to South Africa, bring the crew, do some filming, hang out with Justine, have her play a little piano for us.
Yeah,
right at her place.
Kristen, Carl's cutting into your Jersey Shore money. Gotta protect that.
I was gonna say, my expense account might get us to South Philly, but I don't know about South Africa.
Oh, that's a good question. Joe's asking if Justine is willing to do a MoveTube voiceover. Wow, we should get you to do that.
Ooh.
Yeah, I'll look into that.
That's a great idea. I'll get the side.
Yeah, it is, and it pays real well. Yeah, really, it's exciting. It really is. Yeah. All right. Well, hey, anyway, guys, what do we say? Let's just get right to the fun stuff. Let's get to Mr. Owen Lee on the mortgage market update. And you said you got good news for us today. Now, remember last time you were here, I was, asking you some stuff. You said, just wait. Is that what you're talking about today? Okay. All right.
No, I actually have even better news than that. But if for those of you that follow me on LinkedIn, you saw that, and we're still waiting for the pictures, and I'll be happy to talk about it when we have some of the pictures. But I was in Washington, D.C. last Wednesday and had a private meeting with the Treasury Secretary, Scott Bessent.
Wow.
And some of the other elected MBA officials. There were about 7 or 8 of us in there. And we spoke to him directly about cost affordability on housing, about single file credit pull, about lowering LLPAs on conventional loans, on second homes, on investment properties, on the FHA insurance premium fund, and whether or not we could get a MIP cut in the FHA world. and just a lot of different things that we were pushing on. We were with him for 45 minutes, which is a long time to be with somebody of that stature. It was great. It was absolutely great. And then you got all the trappings of the Treasury Department, founded by Alexander Hamilton, and I'll put together. I don't have the pictures back yet. You couldn't take any pictures, yourself. You had to go with the official photographer. So we're supposed to get those in a few days. So it was, and then we just had to get the release so we could talk about it. So he releases his schedule, and then it becomes public. And it was really cool. It was really cool.
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. I got to imagine that was cool, man. What a neat thing. Congratulations, brother. Well, yeah, that's pretty neat to be in that position where you can have those types of conversations at that level. It's amazing.
I met with Snoop Dogg before. Does that count? I met with.
Oh, that is a contender.
I love really?
Snoop Dogg. No, I'm trying to. I'm trying to set it up. I'm trying to. That is one smart dude. That is one smart cookie. Yeah, he is.
Yeah.
Man. So anyway, I don't mean to get off the topic there. So Owen, no. I was thinking about you the other night. I was watching the State of the Union, bits of it. I'm not one that can sit through an hour and a half of anything, but and I was thinking about, I know you and I were mapping out our next state of the mortgage industry, but if you was to rate our state of the mortgage industry on a scale of 1 to 10, with 1 being 2008 and 10 being COVID 2021. Where would you put us right now? Like on this, what are you predicting for this year coming forward? What's the state of the mortgage industry?
Okay, so here's my question back to you, Carl. Am I allowed to pick 7? Because I know a lot of times when you say this, you're not allowed to pick 7.
No 7s. Are we a 6 or an 8?
We're a 7.2.
Yeah, I think we're in really good shape. I'm seeing a lot of good activity.
We're an 8. Yeah, we're an 8. Listen, we don't have crazy, and I'm about to go into this in a minute, so it's a great setup. We don't have crazy low interest rates. As I've said on the show before, interest rates that begin with a 3 or a 2 only come with some worldwide calamity. They only come when the federal government is intervening in the economics to try to steady the market from some calamity. A plane flew into a building, banks failing, worldwide pandemic, war. I know it's fun, and I know we make a lot of money, but we generally should not root for that because it means something bad has happened. But what we've got right now is I would definitely say an 8. And I'm sure Carl and I are coming out with a State of the Union coming up in the next month or so, and there's a bunch of stuff to talk about. And but anyway, I don't know if this is a good time to get into the slides because we've got some great stuff, some good visuals.
Did you want to do it, Kristen, or you?
I got it. I mean, I say that now.
Okay. I'll get it so you can help. Well, so you could help with the Q&A.
Sure. If you want to do it, you can, Carl, but I have it otherwise.
Either way. See, now it sounds like.
All right, here we go.
Now it's up. I don't. I know you help. You help in the chat. So anyway.
There's a lot of conversation. I know some people follow it intimately, but there's this metric referred to as the mortgage spread, and it's the difference between the 10-year Treasury, which is like the gold standard because it's backed by the full faith and credit of the United States government, and the mortgage-backed security, which is widely believed to be the second safest bond out there, also currently backed by the full faith and credit of the United States government. And the mortgage spread has historically been about 160 to 180 basis points, so 1.6 to 1.8%. And when mortgages first first became expensive again after the pandemic, that spread widened out. And the reason why it widened out is because the mortgages at 7% and gosh, we touched 8 for a while, 8 1/8, 8 1/4. Nobody believed that those were going to last very long. So as an investment, they weren't going to fail. They were just going to disappear because people were going to pay them back sooner. So those spreads widened out. Well, part of the reason why Trump directed Bill Pulte to buy $200 billion worth of mortgage-backed securities is to try and bring that spread in. And it's been brought in. I don't know if brought is the right grammatical term, but it's been brought in, and we are benefiting from it right now. So we've actually had 3 days now where mortgage interest officially, according to the Mortgage Daily, has been under, their daily quote has been under 6%. Now, don't get too excited. It touched a low of 5.98. So I'm not certain that's, really a 5 handle, but 6 is a great number for us. I mean, when you think about, 48 months, we had 7 1/8, and all that stuff. And the 10-year really hasn't moved. It's hovering, somewhere between 4.05 and 4.15, kind of goes up, goes down. But it's that spread that's come in that's been responsible for the lower interest rates. Just think, at its widest, that spread went out to about 300 basis points, 310, which would make interest rates at 7.25. So what would you rather have, 6 or 7.25, right? Carl's refinance program is always an attractive piece of marketing, but it's a lot more attractive at 6 than it is at 7 1/4. Mm-hmm. So we're really, really having a good story to tell right now as that spread comes back to what is much more historically normal, which really is the market saying, hey, it's 6, 6 1/8, 6 1/4. We think these mortgages are going to last. So you can see the Housing Wire headline here. Carl, if we want to bump to the next slide. We're just going to take a look. Okay, so this is the mortgage rate and the 10-year Treasury. The mortgage rate is in orange. The light blue part of the slide, and you look at the yield, that refers back to the axis on the left. So the mortgage rate is at 6. The 10-year Treasury is at 410-ish, and you can see how closely these numbers track one another. So if you were ever concerned, this is going back 4.5 years, if you were ever concerned about whether or not it's true that the 30-year fixed rate mortgage and the 10-year Treasury note track one another, just look at this chart. It almost matches up exactly. Mm-hmm. But that place, especially in 2023, 2024, where you see that yellow line hovering above the 10-year, that's where the spread widens out. And you can see in the last 6 months where the mortgage rate is getting back into the blue as it was on the left-hand side of the slide. That's that spread coming in. So it's really great news for the mortgage business, and it's really an expression of confidence in mortgages as an investment by the financial community. So great news for us. So that's a 5-year look. Carl, you want to bump to the next slide? There's a lot of white on that slide. I don't know if that's one that's easily understood by people that aren't in the business. We're going to get to one that's a little bit better in a minute. Here's the spread. When you look at that spread, you look at 2024, 2023, which they didn't have charted on. This was actually the worst year for the spread. That's when interest rates got up into the 8s. But you can see it riding at about 2.5%. And then last year it was riding at about 2.25%, dropping. and now you can see it well below 2. It's the lowest it's been in 3.5 years, and that's really what's been responsible for this nice run in rates. And as we've talked about before, you've got to get on your horse, because I don't think that we know how long this is going to last. Now, that being said, I have a little bit more confidence than this is long lasting, because we've had, a wildcat inflation number. We've had a decent jobs report last month. We had the Supreme Court ruling against the tariffs. Tariffs, there's a lot of people that say that tariffs, are causing inflation. I really think it's the opposite, is the trade that's going on right now, because if the U.S. government is bringing in hundreds of billions from tariffs, that's hundreds of billions they don't have to borrow. So we'll see, but the spreads are really acting more historically like they have, and that's been what's going on with these interest rates. So let's see the next slide. So average rate offered has now ticked below 6%. This is something I pulled from some of the Optimal Blue averages. I know a lot of people use Optimal Blue. Our company uses Optimal Blue. It shows the average rate locked. Probably 50% of all loans go through Optimal Blue, so this is a good a good thing. So we can see the average offer rate on Tuesday, February 24th. The 30-year conforming was 5.94. Now, this is with points, right? The market has really gotten to the point where par rates people got so rate focused after years of saying, I don't want to pay points, what's my rate? They got so rate focused in 2020 and 2021 that it's really flipped the market for the last 5 years. Almost everything's offered with points now. But you can see 30-year FHA, 30-year conforming, both below 6. And Greg had a question on how many points. I didn't research the average points. It's somewhere between 1.5 and like 1.8 points on the front end. So, and then, so this covers a lot of the industry. This would be a good slide to use because you can see, and you can see this is like a 10-week slide. So you can see it's trending down. All of these rates are trending down. It's a little herky-jerky. It's not a linear line, but they're all going down. And if we get to the next slide, this is a 1-year slide. And I really think this is a great one to use to put your information on and to send out to people, because this just tracks an FHA 30-year fixed and a regular conventional 30-year fixed. And you can see the path, right, of how it's going down. Message being, couple this with some of the other slides I put out, was showing inventory at a 5-year high, interest rates at a 3-year low. This is a 12-month chart. You can see it. If you were waiting on the sidelines, what are you waiting for? This is as good as it's been since the fourth quarter of 2021. It's as good as it's been in 4.5 years. It's not even close. And so I would take this slide, I would put your information on it. It's easy to read. Everybody understands it. And just put it under the banner of now is the time, right? And we got to get on our horse. If there was ever a time where prospecting, we've talked about short series of sprints. I do think this one's going to be around a little while longer because it stays. It has staying power. We get these little news points out that might be contra to interest rates going lower. The market adjusts for 2 or 3 days, and then it starts to come back down. So this is really, really as good of a story as we've had to tell in quite some time. Carl, is that the last one, or did we have one more slide?
That's the last one.
Yeah. Yeah, and this is really the finishing one. This is the one you want to put your information on. This is the one you want to send out to people. So really, really all good news.
Yeah.
So the fundamentals are with us at a time like they haven't been in the last 4 years.
And Owen, I don't know that this would be my broadcasted message necessarily, because I always like the sense of urgency. But the other thing I like about that trend that we're not seeing these significant ups and downs, like a real volatile nature about it. So it seems to be just kind of calming down a little bit at a time, a nice, healthy little downturn, and not this cliff down where quick, if we don't lock today, God knows what tomorrow's going to be. And again, I don't know if I wouldn't broadcast that message out necessarily, because we don't know what rates are going to do, and something could happen where there's a jagged cliff up or down, like we don't know. But I like the way it looks nice and healthy, and it's just a nice, slow, gradual, sloping downhill.
Well, I think the market has been trying to get here ever since the Fed started the rate, cutting the rate. And when you look at it, I mean, we had the so-called red wave trade, or the Trump trade right before, where they thought he was going to balloon the deficit, and then we had the tariff trade last spring, where everybody thought that was going to be inflationary, and then, we would go down with the job adjustments, and then we would get a data point that would not be friendly, like a singular month. And then we had the delayed information because of the shutdown. And then we had most recently, I thought that the Supreme Court decision might do something with the interest rates, because I think a lot of people are amazed at how much money is being brought in from the tariffs, and how much of that is being absorbed by the producers. Or the thing about tariffs is, people always forget the fact that consumers can make a different choice. Like if a product's pricing is going up because it comes from another country, well, you walk down the grocery store and you want to buy a cup of coffee, you've got 50 brands from which to choose, pick a different one. And I think they underestimated what would happen with that. So now that we see that the tariffs have not largely been inflationary, cost of gas continues to be very low, which the cost of energy drives everything. And it's just I think we're going to have a period of calmness. I don't have any wood around me that I can knock on, but I would be knocking on it enthusiastically if we did. Because you never know. But I mean, get on your marketing horse, get on your prospecting horse, because this is the best time in 4.5 years. I don't, absent some calamity, I don't think we're going to see rates with a 3 or a 4 or 2. So if you're not making money when rates are 6.0, it's because you're probably not pounding hard enough.
Oh, and on our last Call Stars Blitz here a couple weeks ago, we got the most amount of people. We got the most amount of contracts, refi commitments during that 6-hour block of time where we're making the calls. I mean, it always does extremely well. This was by far. I mean, it's always been a solid 8 or 9. This was by far the most leads, the most referrals, the most locks, the most applications taken during that 6-hour period than we've ever seen. So I think with rates stabilizing, I think people realizing that it looks like the world's not going to blow up tomorrow, figuratively speaking, and maybe literally speaking, and that and we're coming into the springtime, with historically this. It's just like you said, it's market. A really, really good time.
Well, never underestimate, the economic fundamentals are, like I said, more houses for sale. I know the home appreciation coming down a little bit is frustrating for some people in the Carolinas and Georgia and Florida and Texas and the westerns to Arizona, California. But I mean, you were so white hot. Yeah. If appreciation goes up, that's actually bad. Because it prices so many people out of the market. Interest rates coming down, units going on the market. It's affordability, and I still think I do still think we're going to get some affordability measures from the Trump administration. Whether it's lower LLPAs and an adjustment that might help. the MIP cut, I'm not as optimistic about because the foreclosures are rising. That's a separate half-hour discussion. They've got to save some of that money, but there's still room for some administrative action, and I think we're going to see it.
Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com.
Anything on the horizon that we need to be looking out for one way or the other, Owen, or is this kind of a pretty, looks like stabilizing time that we're in right now?
I think it's pretty stable. The one thing I would keep my eye on is what are you doing about trigger leads? Most people are not doing much about trigger leads. The trigger lead, we're within about 2 weeks of trigger leads ending. I forget, I don't know if it's March 5th, March 6th, that the trigger leads legislation goes into effect. You should be getting those trigger leads. You now want to get the trigger leads. There are several services that offer them. I know, Carl, your team and our company offers them to our loan officers. We get them to them. These things are going to become infinitely more valuable in about 15 days. Get on the horse and make sure you have access to that information, and make sure that you have a pricing program which is 100% legal inside your company to get on the horn with those folks and sell them.
And just for clarification, we're talking about trigger leads of people that are in your database. You pulled credit on them. Maybe you closed the loan. Maybe they chose somebody else, but you've gotten.
If you're past borrowers, you are allowed through a carve out in the legislation to get trigger leads on the loans that you've closed. Yeah. Your past customers.
Not just your past customers,
and people who have given. I'm sorry. Go ahead.
No, you were getting ready to say it, so go ahead.
Well, your past clients, right? The borrowers that closed, and what I think is going to be the most growing segment, and Carl, I'm sure this will be a topic on our State of the Union, is the people that give you permission, right? So you should have a system working in the background to have people who you touch give you permission. If you don't have that, you are going to lose potential loans in the future years. You have to have a system for that.
That's going to be a big deal. That's likely going to be an even bigger deal than just your own past clients, because I have more contacts and always have, and I everybody. This is not just me and my team. This is everybody. You speak with more people. More people don't choose you or your company or go forward at that time than do. So most, like on a good day, it's like you'll capture 25% and 75% you won't capture. Well, what if you got the permission from that other 75% also in a legal document where you can do it? There's actually more referrals and leads and future business from the ones that didn't use you than the ones that did. It's a bigger number.
Yeah, Carl's, because of an internal system within our company, Carl's team is capturing hundreds of those people every week. And it's going to be tens of thousands over the course of the year. And those are going to produce fruit. Just like planting seeds. Yeah.
Yeah. Big number. All right.
Interesting. Very interesting.
A lot of neat stuff going on, Frank. And I tell you, it's a different business world, or a different world in mortgage wise than it was even 5 years ago, or even certainly 10 years ago. And that there has to be a different set of strategies and using technology to your benefit, and not just by doing an AI thing with you in a Superman cape or Superwoman cape on. Nothing wrong with doing that. I'm for sure. But that's not where the money's made in technology. It's in the kind of things that we're talking about. So, hey, Brad, take us home, buddy.
Yeah, you gotta.
Owen, I'm wondering why the MBA doesn't do some sort of a public service announcement to tell the public that these rates right now are like the new normal, and don't sit around and wait for new rates. Educate the public that these rates are but this is what we're going to have for the foreseeable future. That would start to, I think, get the public understanding. Look, let's start moving. Even your company Success could be doing advertising as your company. Hey folks, this is the new normal. Call Success Mortgage Partners and do your business.
Well, couple of things. We do a lot, thousands of outreaches every day for that, but I would hesitate to stay away from the new normal, because you also want to create a little sense of urgency on the borrower part. I don't think I wouldn't feel comfortable. As much as I feel comfortable saying to the 300 people that are watching this or whatever, I do think this rate has a little bit more staying power than rates that we have in the past. You be careful when you talk to your borrowers about this is the new normal, because if they think this is normal, that gives them permission to wait. And the confluence of interest rates, homes on the market, those kinds of things. I can't guarantee. Nobody can guarantee that that's going to stay. So
well, maybe you
get a balance, creating urgency.
Maybe the term "the new normal" isn't the right term, but if we could educate the public that don't wait around for the threes, because they aren't going to come. If you follow what I'm saying, I'm not saying that would be something that I think would be beneficial to the whole industry.
Mm-hmm.
Well, we're the boots on the ground. We're the ones that got to say it, really. I mean, I don't know how many people monitor the NBA publicly, in what form they would do that.
Well, we're the boots on the ground. The NBA is about, the NBA's core is advocacy on behalf of the industry and education for the industry. It's not, it's not like a realtor where everybody has to belong and a portion of those dues go into general advertising. Our mission is a little bit smaller and a little bit more focused.
It's not a PR firm, I get it, but I guess my suggestion is somehow if we could get that message out to the general public, I think it would help.
Okay. Good stuff.
Yeah.
Thank you, Brad. All right. Well, good show today, man. Thank you, Owen. It's always a pleasure, man. You're awesome, brother.
I love bringing good news.
Yeah. Well, we love hearing it, man. We love hearing it. We can't wait to see those, pictures. That'll be awesome when those are released. All right, man.
Yep.
Cool stuff, man. Thank you, Owen Lee, as always. And for the rest of us, let's get moving, man. Today, thank you. And today is our pre-approved and looking day, so we know what to do there. Let's see. Who's going to tell us what we do there? How about Adam, the mortgage ma? He's the mortgage ma for me today. Yeah. Yeah. What are we doing today, Adam?
What are we doing today? What is it? Thursday?
Yeah.
What is today?
Pre-approved and looking. Yeah.
There you go. All right.
Yeah.
Yes, sir.
What do we do?
Couple more. Ask
what
for
do we
business.
say? Sounds pretty good to me.
Friends, family, or coworkers looking to buy, sell, or refinance when you're on the phone with them. Let them know what's going on. See if they found the house.
Yeah.
Still looking. Get with your real estate agents.
Seems ridiculously easy, Adam.
It is.
Yeah, it seems ridiculously easy. Yeah, I love it, man. Thank you, brother. Appreciate you.
You're welcome.
All right. Well, good enough, man. Guys ready to roll? Ready to get out of here? Do it all over again tomorrow? Let's do it, man. You guys have a great day. Owen Lee, thank you again. We're blessed to have you, brother. We appreciate you. All right, you guys.
Thanks, everyone.
See you manana. Adios from the Loan Officer Breakfast Club, Mortgage Marketing Animal. See ya.
Have a great day, everybody.